Chapter 23, T24 Corporate Lending Architecture. Introduction to T24 Corporate Lending. T24, now known as Temenos Transact, stands as a universal banking core designed to manage a comprehensive range of financial products, spanning from retail and corporate banking to specialized Islamic finance, all within a single integrated platform. This chapter delves into T24's architecture, specifically focusing on its corporate lending capabilities, which are primarily housed within its authorized applications and enterprise banking modules. Unlike specialized platforms such as Loan IQ or ALGO, which are purpose-built for structured corporate credit, T24 approaches corporate lending with a fundamentally different philosophy rooted in its universal transaction processing engine. T24's universal core philosophy: everything is an account with rules. T24's foundational design principle is that all banking products can be managed through parameterized accounts and arrangements. This philosophy underpins its ability to support diverse banking operations including retail banking, corporate banking with complex arrangements and limits, Islamic banking with profit-sharing arrangements, and treasury operations. From a technical perspective, this universal data model simplifies integration with the general ledger, providing a single source of truth for financial reporting. However, the inherent complexity of corporate lending often necessitates extensive customization, which can be a significant challenge during implementation and upgrades. From a business perspective, for banks operating across multiple segments, T24 offers the advantage of a unified platform, reducing operational silos and streamlining reporting. However, the trade-off can be a less specialized fit for highly complex corporate finance structures compared to best-of-breed solutions. Core corporate objects in T24: arrangements, limits, AA, and EB. T24's corporate lending model is built upon three primary constructs that work in concert to manage credit exposure and product delivery. First, arrangements serve as the facility equivalent, defining the risk boundary for a specific counterparty or client. Key attributes include arrangement ID, limit reference, product restrictions, tenor and expiry, charges and commissions, and linked collateral. Second, the limit module provides sophisticated multidimensional control for managing credit exposure. It allows banks to set and monitor limits across limit amount in multiple currencies, limit type categorization, counterparty and group references, product sublimits, and currency limits for foreign exchange exposure. Third, Authorized Applications is the account-level processing engine responsible for managing actual transaction accounts. It handles corporate accounts, loan accounts, charges calculation, and interest or profit processing. Fourth, Enterprise Banking provides corporate-specific extensions including complex facility modeling, trade finance integration, cash management linkages, and corporate portal capabilities. The T24 corporate hierarchy shows how a counterparty or group can have multiple arrangements, each linked to specific limits for effective risk aggregation and control. Arrangements versus facilities. T24's risk contract. Arrangements in T24 are the closest equivalent to traditional banking facilities, representing the approved right for a client to utilize banking products within predefined boundaries. The lifecycle involves credit approval, limit linkage, product definition, operational booking, utilization monitoring, and expiry management. Key differences from specialist platforms like Loan IQ and ALGO include less granularity at the tranche level, stronger direct integration between arrangements and AA accounts, and tight coupling with the general ledger ensuring that account-level postings are directly driven by arrangement terms. Limits. T24's multidimensional engine for risk management. T24's limit module is highly sophisticated, offering multidimensional control over credit exposure. Features include collateralized limits with loan-to-value ratios, multi-currency conversion with real-time rates, hierarchical limits at facility, group, country, and product levels, temporary overdraft permissions, expiry and review cycles, and real-time utilization visibility. The strength of the limit module lies in its native integration with accounts, providing seamless flow from account transactions to limit utilization and ultimately to exposure reporting. This real-time capability is crucial for effective risk management. Corporate accounts in AA, overdrafts, loans, and deposits. The Authorized Applications module manages various corporate account types including overdraft accounts linked to ARR limits, term loan accounts with amortizing schedules, deposit accounts for time deposits and current accounts, charge accounts for fees, and collateral accounts for pledged assets. AA's robust engine supports fixed-rate loans, floating rates with benchmarks like IBOR or SOFR plus margin, Islamic profit rates adhering to Sharia-compliant methods, step-up and step-down schedules, penalty interest for late payments, and various day count conventions. A critical feature is arrangement-driven controls where accounts inherit limits, product definitions, and expiry dates directly from their parent arrangement, ensuring consistency and control. EB Corporate Structured Facility Extensions. Enterprise banking extends T24's core capabilities to address more complex corporate finance requirements. Features include multi-tranche facility modeling, syndication support with participant tracking and agency roles, trade finance facility linkages, cash pooling and sweeps, corporate netting arrangements, and deal blotters for relationship managers. The integration between EB and AA ensures that complex terms defined in EB facilities are accurately reflected and processed at the account level within AA, with real-time updates on limit consumption. Islamic capabilities, a native T24 strength. T24 boasts mature and comprehensive Islamic modules, making it a strong contender for banks operating in Sharia-compliant markets. It supports Murabaha cost-plus financing, Ijara Islamic leasing with asset registers, Musharaka partnership financing, Wakala investment agency arrangements, and Sukuk issuance and processing. The profit calculation engine replaces interest with profit rates, supports periodic profit distribution, handles rental schedules for Ijara, and maintains Sharia audit trails. T24's native Islamic capabilities eliminate the need for extensive customization, providing a significant advantage in GCC and Islamic banking markets. T24 strengths and limitations for corporate lending. Strengths include universal banking integration across retail, corporate, and Islamic products, strong GL and accounting integration, mature Islamic finance capabilities, robust multidimensional limits engine, and lower total cost of ownership for multi-segment banks. Limitations include less specialized syndicated loan functionality compared to Loan IQ or ALGO, complex customization requirements for advanced corporate structures, parameter-heavy configuration requiring specialized expertise, and performance challenges with high-volume corporate portfolios. T24 excels when banks need a single platform across multiple banking segments but may require complementary solutions for highly complex syndicated lending operations. Common implementation challenges. Setup challenges include arrangement and limit mapping complexity, product definition and parameterization errors, and AA account hierarchy misconfiguration. Integration issues involve GL posting rule configuration, benchmark rate feed integration, and corporate portal connectivity. Performance concerns include slow limit checks on large portfolios, batch processing bottlenecks for interest calculations, and reporting performance on complex hierarchies. Key lessons learned. First, invest heavily in business analysis to map existing products to T24's universal model. Second, establish robust parameter governance to manage the extensive configuration requirements. Third, plan for performance optimization early, especially for limit checking and batch processing. Fourth, leverage T24's native Islamic capabilities rather than building custom solutions. Key questions for T24 corporate lending implementations. How will you map your existing facility structures to T24's arrangement model? What is your strategy for limit hierarchy design and real-time utilization tracking? How will you integrate benchmark rate feeds for floating rate products? What approach will you take for EBAA integration and account hierarchy? How will you handle syndicated loan requirements if needed? What governance processes will manage the extensive parameterization? How will you optimize performance for limit checking and batch processing? Bottom line, T24 is the right choice for universal banks seeking a single integrated platform across multiple segments. Success requires understanding its universal philosophy, investing in proper business analysis and mapping, establishing strong parameter governance, and planning for performance optimization. For highly specialized syndicated lending, consider complementary best-of-breed solutions alongside T24's core capabilities.